far the furnitures are concerned, the furnitures as well as fitting, the blockages are going to be done like this. Block 1 consists of furnitures and fittings, including electrical fittings, and electrical fitting includes the electrical wiring, switches, and all these things. That is chargeable up to 10% of the depreciation. Again, block 1 on plant and machinery is concerned. Block 1, motor cars other than those used for the business of running them on hire or acquired during the period from 19 to 2020, put out for use in the before 2020, 31/3/2020, 30% can be claimed as depreciation. In motor cars other than that, 15% can be claimed as depreciation. Block 2 consists of motor buses, motor lorries, motor taxis, and for them two different rates. For first category 45%, and the second category that's going to be for 30%. Block 3 consists of molds used in the rubbers and plastic goods in factories. So that's going to be for 30%. And block 4, airplanes, aero engines, and things like that. You can claim 40% on such motor vehicles or plant and machinery. And then specified air pollution control equipment, water pollution control equipment, you can claim 40% on that. And then plant and machinery used to semiconductor industry, converting and all these things, 30% can be claimed. Life-saving medical equipment 40%. Machinery and plant acquired for and installed on or after a particular date of 2002 in a water supply project and water related project, 40%. Oil wells, again you can go for 15% as depreciation rate, and block 10 consists of renewable energy saving devices, 40% can be claimed. So as far as the plant and machinery are concerned, 10 different blocks are there for plant and machinery with different rates of depreciation. Then still some more are there, like again block 11, computers including the computer software. Block 12, books, that's owned by the assessee for carrying on business, particularly the chartered accountant, lawyers, doctors and things like that. Block 13, books owned by the assessee for carrying on business, in the case of lending libraries. So for them the rate of depreciation is going to be 40%, and plant and machinery general rate is going to be 15%. As far as ships are concerned, block 1, ocean goods ship, going ships, it's going to be 20%. Vessels ordinarily operated on the inland water ways, that's going to be 20%. And speedboat operating on the inland water ways, it's going to be 20%. And for intangible assets, for any intangible assets, they're going to be charged with 25% of the depreciation. So for different asset backing, different types of, different varieties of rates are available. So 4 blocks in case of building, 1 block in case of furnitures and fixtures, 13 blocks, almost 14 blocks in case of your machinery, 14 different rates, and then 3 blocks in case of ships, and 1 block for all the intangible assets into consideration. So different rates ranging from 10%, 5% to 40%. You are going to have different rates of depreciation. Generally, the rates of depreciation allowable are under return on value method, as prescribed the rates are given. Now, allowable expenditure in case of scientific research, that is also specified in section 35 of the Act. The deductions allowed under this section consist of three different varieties. One, the company who is engaged in the business of technology or in any other businesses of manufacturing or production, or any not being given in the article, or turning specialized organization into the list of the 11th schedule on an approved in-house research and development facility. So if you have got, or if you have doing any of these activities like manufacturing, technology based, and if you have got an in-house research and development facility, probably you can able to have 100% of the expenditure incurred with respect of any scientific research carried on by such organizations. So if you are doing your own or having your own research and development department, and if it is going to carry on research and development, any expenditure carried on for research and development, 100% of that is going to be taken into account or deducted in case of an organization itself is owning that kind of a research activity. Second category is this is going to be the expenses incurred by the assessee on scientific research related to the business. So all your any expenditure which is of revenue in nature, you can claim 100% of it. In case of capital expenditure as well as in case of revenue expenditure spent on any other items excepting land, you can claim 100% of such expenditure as deduction. The third one is, if the expenditures are paid for certain other purposes, most of the cases 100% of such expenses can be paid out, can be deducted as deductions. Complete deductions can be made on all the scientific research organizations. This is as per section 35 of the Income Tax Act. This is what I was saying, any expenditure other than the cost of land expended on the scientific research related to the business can be claimed. Contribution to the associations, universities, colleges, or for the purpose of scientific research, in case of that also you can claim 100% of it. In some cases, the national laboratory, if you are contributing to the national laboratory, you are eligible for 175% of the deductions, and association, university, colleges for the purpose of research in social sciences and statistical research eligible for 125% deduction. In-house research in specified industries are eligible for 200% deduction. So these are the provisions relating to scientific research under section 35. 35ABB, the expenditure for obtaining the licenses of to operate the telecommunication services, they are allowed as deductions equally over the number of years till of the validity of the license. Suppose if your license is going to be valid for 5 years, and your expenses can be equally claimed for 5 years. Then other expenditures like 35AC, expenditures relating to eligible projects, CCA, 35 CCA, expenditures for carrying out rural development programs, 35 CCB, expenditure for carrying out the programs of 35 CCB, expenditure for carrying out the programs of the conservation of natural resources. On all these things also you can claim the expenditures, all of the expenditures as deduction. And preliminary expenses, reduction is allowed for 5 years. Amortization of amalgamation or demerger in 5 years. Amortization expenses of VRS expenses in 5 years. And expenditures in the mineral projects and prospecting, there you can take the expenses and divide it for 10 years. And according to other section 36, other deductions include insurance premium paid for the coverage of the risk of the damages or destruction of stock, bonus, commission paid to the employee, interest on borrowed capital, contribution to recognized provident fund, contribution to approved gratuity fund, writing off of the useless or dead animals, bad debts, expenditure on promotion of family planning among the employees. So any expenditure met out on all these terms, they are also going to be allowed as deductions under section 36. And as far as 37 is concerned, general expenses under section 37, the conditions to be fulfilled is the expenditure should not be in the nature of prescribed for 30 to 36, and any other expenses which are not covered under 30 to 36 are going to be taken as general expenses and not a capital expenditure, not personal expenses, and for the purpose of business. It will be incurred for the purpose of business. And 37B, 2B, deduction is not allowed in respect of the expenditure incurred by an assessee or advertisement in the souvenir, brochure, the pamphlet, and the like publishing by the political parties and things like that. They are not going to be not allowed as expenditure. And 40A, it talks about the disallowance under section 40A, interest, royalty, fee for professional services paid out outside India without deduction of TDS. They are all not going to be allowed as deduction. So this is going to be disallowances of deduction. And the payment of payment to the resident without deducting TDS. Any TDS, the following payments are covered, like interest, commission on brokerage, rent, fee, technical know-how, professional services, royalty. All these again are going to be disallowed under section 40. Securities transaction tax, fringe benefit tax, income tax, wealth tax. All these taxes are also not going to be allowed in section 40A. 40B, it talks about amount of deductible in case of the partnership firm. So interest exceeding 12% are not going to be treated, and remuneration to the partner are not going to be treated as reduction, and the remuneration to the partner is allowed up to first 3 lakhs, 90%, or 1,50,000 rupees, whichever is higher. The balance 60% is allowed. It's a ceiling. Okay. And 40A, excessive payment to the relatives and payment exceeding 20,000 rupees in more otherwise than cross the check, and the entire amount is also going to be disallowed. Contribution to non-statutory funds, provident fund, unapproved gratuity fund, They are also not going to be allowed as reductions. And 43B. 43B, we will take it out to the next session.